Meta just crushed it with an 8.8% jump today. And there's a bigger story behind why tech is suddenly looking like a safe bet again. But here's the thing, not every stock is playing along. Let's find out what it means for your portfolio. Let's start with the indices. So the Nasdaq had a mixed day, down about 0.66% to close at 26,040. Now that sounds like a dip, right? But here's the context. The week is still solidly in the green, up 2.21%. The story today is really a tale of two markets. You had some big semiconductor stocks getting absolutely hammered, which dragged the whole index down. But Meta's massive gain and some rotation into other areas kept things from getting ugly. It's the kind of day where the headline number doesn't tell you the whole story. The Dow barely budged today, down just 0.03%, sitting at 52,305. So basically flat. And like the Nasdaq, the week is still positive, up 0.88%. Here's what's interesting though. The Dow held way steadier than the Nasdaq, which tells you that large cap, old school stocks are catching a bid right now, while growth tech is getting some profit taking. That's not a bearish sign, it's more of a rotation. When the Dow and Nasdaq diverge like this, it usually means money is flowing around the market, not leaving it. Now here are the top movers of the day. KLAC got absolutely crushed today, down 11.77% to 266.19 cents. Now, if you look at the week, it's actually up 10.69%. So this is a massive reversal. That kind of single-day volatility in chip equipment stocks usually comes from guidance warnings, earnings misses, or sector-wide concerns about demand from memory and processor makers. The week-to-date gain getting wiped out in one day suggests something pretty concrete spooked the market today. LRCX had its own tough day, down 9.71% to 391.26 cents. Again, another semiconductor equipment player taking it on the chin. The week is still up 4.39%, so it's the same pattern as KLAC, solid week, rough day. These two moves together suggest there's some real concern rippling through the semiconductor equipment sector right now, whether it's about CapEx plans or supply chain expectations. When two names in the same space gap down like this, it's usually sector-specific, not just random noise. Meta is the story of the day, up a massive 8.81% to 612.91 cents. The week is up 9.91%, so this momentum has real legs. The move today almost certainly ties back to optimism around AI and advertising demand. Meta's been in the doghouse for a while, but investors are clearly rotating back in on the theory that its AI infrastructure spending is paying off and that ad platforms are going to see a real boost from AI-powered targeting and creative tools. This is a big positive signal for the mega-cap tech names. YLV popped 7.62% to 416.19 cents, with a weekly gain of 8.38%. This healthcare and life sciences play is catching some momentum, and honestly, it fits the pattern of rotation we're seeing. Investors are feeling a bit better about growth, so they're willing to take some risk on stocks like this. The week's move is solid and steady, which suggests this is real demand, not just a squeeze or a one-off headline. CAT is down 6.9% to 991.41 cents. Now here's where it gets tricky. The week is actually down just 0.31%, which is basically flat. So you had a pretty solid week, and today's pullback is just noise or profit taking. CAT is a bellwether for global industrial demand and construction, so a day like this can sometimes signal that traders are getting a little cautious about economic momentum. But one day down doesn't break the story, especially when the week has been neutral to positive. Now let us look at energy and fuel. Oil took a hit today, down 2.03% to $68.09 a barrel. And that weakness carried through the week, down 3.2% over the last 5 days. The big picture here is energy prices are cooling off, which honestly makes sense. Summer driving demand is here, but there's just not a lot of panic in the supply chains right now. No new OPEC surprises, no geopolitical fireworks. It's just a normal correction after some strength earlier in the year. Natural gas dropped 2.13% today, landing at $3.21 per million BTUs. The weekly move is small, just down 0.31%. So today's sell-off looks more like a single-day thing. You're heading into summer, so heating demand is basically gone, and air conditioning is ramping up, but the market's not seeing any supply stress. Storage is healthy, and there's just not a lot of urgency in the market right now. Moving on to metals. Gold is doing what gold does when people get a little nervous. It's climbing. Up 0.54% today to $4,044.60. And the weekly move is even better, up 1.36%. This is that classic safe haven bid. When stock markets are choppy and there's uncertainty about what the Fed is going to do next, money flows into gold. The fact that it's holding gains all week tells you there's real demand, not just a one-day pop. Silver jumped on the coattails of gold, up 0.2% today, but with a much more impressive week, up 2.67%. This is interesting because silver usually follows gold when it's a pure safe haven play, but silver also benefits from industrial demand in manufacturing and tech. So when silver is outperforming gold like this week, it's saying two things at once. Yes, people want safety, but they also think the economy is solid enough that industrial demand will keep rolling. And finally, let us look at tomorrow. All right, here's what you need to know heading into tomorrow. The big event is the June jobs report dropping at 8:30 a.m. Eastern. We're looking for 114,000 new non-farm payrolls. That's a meaningful slowdown from the 172,000 we saw in May. If we hit that number or come in light, it could spark a whole new conversation about the Fed's next move and whether rate cuts are really coming this year. We're also getting wage data, jobless claims, and a bunch of other labor details. It's a packed calendar, and the market is going to be watching every single number. The tone from these reports could either confirm that inflation is cooling and the Fed has room to ease, or it could suggest the economy is slowing faster than expected. Either way, tomorrow morning is going to set the stage for the rest of the week. Stay sharp, check those reports first thing, and remember, the data matters. We'll be back with the full breakdown as soon as those numbers hit. For your daily market update video, don't forget to hit that subscribe button and turn on the notification.